from Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB. I'm Nadine Blaney, and my special guest today, Martin Crabb, CIO of Shaw and Partners. We will get to him just momentarily. Want to take you across the market, though, because going into that interest rate decision, we had the market down by about 0.6%. Look at that spike higher at 2:30 p.m. and has sort of meandered along that route. So it looks as if the S&P ASX 200 has closed lower, but higher than it was pre the RBA decision, leaving the cash rate on hold at 4.35%, but sounding decidedly a bit more dovish to some. Let's see if my guest agrees in just a moment. So yeah, a dovish tilt is the takeaway. The RBA expressing some confidence that they are moving toward their inflation target. However, as you've just been hearing from the Governor Michele Bullock, there are still a lot of factors, and some still calling it too early, too soon to get that narrow path achieved insofar as a cut coming come February. One other thing that's added to the mix today, of course, are the hopes for Chinese stimulus. And so we don't know the detail, we don't know the size or scope, but it appears as if China is committing to more monetary policy stimulus, and that has sent a rocket under some of the miners. In particular, the Aussie dollar, though, boy, coming under a lot of pressure with those changing interest rate expectations. Let's take a look at the likes of Fortescue. It was mentioned on the call today. Talked about it from a technical perspective. And it was interesting because the guys, of course, sent their charts before this near 7% spike today. That episode of the call, very much worth catching up on. It's up online, ausbiz.com.au. Fortescue closing the session at $20.48. We have seen strength in iron ore off the back of that expectation for some more targeted and more significant stimulus coming from China. Let's just see where the selling did come through, though, and look no further than tech. So it started on Wall Street with NVIDIA coming under a bit of pressure, and it really did continue here in a meaningful way. WiseTech off by 4% to $125.45. NextDC down by 3.3% to $15.73. It's, it's just indicative of where we're seeing the money flow today. Today, coming out of the banks as well. So CBA off by 0.75% to $157.60. Another company we looked at from a technical perspective on the call. And I'll just tell you, they both said hold, because even though neither reckons the fundamentals justify what we're seeing on screen right now, they did agree that as of now, the momentum is still to the upside. Very quick run through some of these corporate stories. Perpetual could be hit with a tax bill of more than $500 million over the sale of its assets to private equity giant KKR. IAG will defend itself against a class action brought to the Supreme Court of Victoria. Both of those companies, well, Perpetual's second really terrible day. Shares are at $20. Also, more pain for Woolworths, although today's the share price was up to $30.31. The competition regulator in New Zealand is filing criminal charges, alleging the supermarket giant and its Kiwi rival Pack and Save are misleading shoppers on promotional prices, so taking their cue from the ACCC. Treasury Wines as well in the news. It will require 75% of Stone and Moon Winery in China for about $28 million and the option to buy out the remaining quarter in 5 years' time. Okay, there's other secondary stories, of course. BrainChip has won a U.S. Air Force contract. We've got Aurora completing its buyout, starting its on-market share buyback. But look, I do want to get to Martin Crabb. He's joining us from Shaw and Partners. Martin, nice to see you.
Good to see you too, Nadine.
So, dovish tilt, slightly more dovish, or are we getting a rate cut in February?
Yeah, she didn't rule it out, did she? So the market's shifted. Like the whole market was at November, then they moved out to February, and a lot of people we follow moved out to May. She's put February back on the table with a slightly more dovish tone, but we've just sat through an hour of pretty much a nothing burger where she's not really saying much about what the new board's going to look like, what the new decision-making process is, who's going to be on it, who's not going to be on it. Are they going to tell you who's voting, who's not voting? There's a whole lot of uncertainty about what happens with the RBA going forward, but she's pretty clear that she's not going to do anything until she's comfortable that inflation's at 2.5%, not in the band, got to be in the middle of the band, Nadine, got to be at 2.5%. And we're not there. Underlying inflation, as they point out, is 3.5. There's zero negative productivity growth, so wage rises are just inflationary. So we just saw Woolies settle their industrial action with an 11% pay rise for the distribution centre workers over 3 years. So unless they're producing productivity gains in those distribution centres, that's inflationary. Woolies have to put up their prices. So there's a lot of that going on in Australia. And until that changes, I can't really see the RBA doing much. So we're in the May camp.
Yeah, and that's the thing, is that there has been a significant shift in market pricing, but she still did point out that labour conditions remain tight, fighting inflation is the highest priority, and that it remains too high. So I know that everybody likes to take out what they want to hear sometimes from these things, but it doesn't sound like she's for turning until the data supports that view.
I mean, to her credit, she's been very consistent in her messaging. Previous RBA governors have got themselves into hot water for flip-flopping on some of the promises they made. She's obviously learnt from that. But the currency markets, the way they shifted on the statement suggests that a likelihood of a cut's going up. The SFE futures traded pretty lightly, but they dipped a little bit lower for March. So the March contract is probably the one that's, that's oscillating between is it February, is it May? There is a bunch of data coming through relatively early in the new year that the Feb meeting will be able to have a look at. So I think February's still live, but it's clear that other central banks, Bank of Canada is going to cut this week. Jerome Powell's probably going to cut next week. The interest rate differential story is driving the currency. The currency is probably the most sensitive thing. The stock market's not really reacting too much to it. In fact, most of the US dollar earners today were a lot weaker, which is interesting. It's more about the currency. So that's the futures curve. Not every contract traded in the afternoon, but you can just see a little bit of a dip lower in the futures contracts from, say, a week and a month ago. We were drifting higher there on the higher for longer. We're just starting to see a little bit more price action priced in, but we're still not going to be not be below 1% cut by the middle of next year. So not a lot of cheer for mortgage owners, but some relief, some small relief.
Okay. Has today's decision significantly changed in your mind? Any strategy needed for 2025?
No. I think stuff that's happening overseas is what's driving investors thinking rather than domestically. I think the story in Australia is pretty easy to understand. We've got a tight labour market. We've got some shortages in some areas that's keeping inflation up, which means that the RBA is on hold. We have a federal election, but we don't have to worry about that for 6 months or so. Really what we're all focusing on is what's happening offshore, and there's geopolitical events all over the place, whether it's Syria or the Ukraine or whatever. So that's keeping us nervous. And then what's Trump going to do? Who's he appointed? What's his policy response going to be? It's the 20th of January, the inauguration. So that's going to be on us before we know it. And really just the upgrades to earnings that we're seeing, Nadine, that's really driving investors. Any investor that was underweight US equities, and there were a lot of them, have gone, that earnings powerhouse in the S&P 500, I can't be underweight that. We're now looking at 17% EPS growth Q4 this year to Q4 next year. That's a big number in a big economy, and that's driving world growth. So if you're not there, you're going to suffer. So that's kind of what is driving our thinking, is just that US market, and that's 75% of the MSCI, right?
American exceptionalism.
Yeah,
okay,
exactly.
So what about the China stimulus? I mean, we've seen this knee-jerk reaction in the miners. Does this shift your thinking about resources next year?
Yeah, I mean, I don't know. I'm a little bit sceptical on they're going to stimulate. We all get excited. Was it back in September when the resources index was up 10% for the month, and it caught a lot of investors off guard because everyone was just saying, well, we can see what's happening with construction, we can see what's happening with housing, iron ore demand's going to fall. China's exporting record amounts of steel at the moment because everyone's trying to beat the tariffs. In fact, their exports to India have set a record last month. That's going to finish as soon as the tariffs come in. So, make hay while the sun still shines, but the iron ore price is going to crack next year. And then you have these little moments where that narrative, maybe we're wrong, we better cover. So the price action today was fascinating. Pro Medicus down 8%, Hub 24 down 8%, all those test stocks down 5-6%, Min Resources up 8%, Pilbara up 6%. It just shows you how short the market is resources and how long to the gunnels we all are on tech stocks. So we trim a bit of those just in case we're wrong on China. But until we see a forthright policy that says we're going to increase residential construction, which they're not going to do, then I think a lot of this is just a little bit of short covering. People, jumping at shadows a bit. The Chinese market was up 2% today, so there wasn't a huge kind of rally. I think it just shows investor positioning. Everyone's very short iron ore, everyone's very long growth, and you get a little bit of a wobble and everyone underwinds it.
Yep, so a bit of profit taking coming through in the tech space today, but that could change overnight if you have a good night for US tech, right?
Oh, look, it does feel, the Mag 7 feels a bit toppy. The numbers that are coming out aren't screamingly better than everyone thought. They're okay. There's still beats outnumbering misses, but not to the extent that you need to run out and upgrade. And when I read people upping their target price for Tesla or upping their target price for Nvidia, they're pushing the PE up. They're not saying the earnings are going to be so much better than I thought.
Yeah.
I'm going to upgrade on the back of higher earnings. They're just saying, look, these things should be trading at higher PEs than they are, which is always a little bit of a late bull market kind of behaviour. It's like, this share price has run above my target price, I better upgrade. I want to be ahead of the market so I can keep a buy on it. And I just think when I see that, I get a little bit nervous.
Okay, so you're in the camp that there will be opportunities in small caps next year?
Yeah, big fans of small caps. I think every small cap manager that comes on your program probably says this is the year of small caps. And look, they did do okay last year. We just published a note last night, which we do this time every year, which is like, okay, you cover 100 of these small and micro cap stocks, which are your 10 favourites? And we do suggest people take a basket approach, because if I look at last year's results, the average was plus 50, which was fantastic, but the best was plus 200 and the worst was minus 40. So if you try and cherry pick the names, you can get hurt. But here's a group of stocks from additive manufacturing through vanadium, payments in Hum and B4Pay, Bannerman's in the uranium place, Chrysos is in the assaying business, Metro Mining, bauxite, Santander in gold, Silex nuclear, and Southern Cross. So it's a real cross section. But that's deliberate, right? We don't want to say put all your money in gold miners or put all your money in uranium. And so we think these stocks have a fair bit of upside. And you can see the Shaw and Partners target prices on the right-hand side. Some of them are well ahead of where the shares are. Again, I would be very, very surprised if all of those stocks are up next year. But hopefully, on aggregate, investors could do worse than invest in that as a basket.
Ooh, I like that list. I'll be reading that note tonight, Martin. I didn't have time with the RBA by the time it came through.
It's a good read.
I really enjoy that. Okay, so you're feeling okay as we're heading toward Christmas, but you reckon we're in for more volatility?
Yeah, undoubtedly so. Markets don't go up in straight lines. We've had a pretty good run, particularly in US tech and Aussie companies with US dollar earnings. So you think of things like, Telix, Pharmaceuticals, Square, Block, those sorts of stocks have done, Hub24 have done like plus 20, plus 30 in the past, 6 to 8 weeks. I wouldn't be surprised if we have a bit of a breather. But I think structurally you want to be overweight equities, want to be overweight global equities, leaning into small caps. Be cautious on some Aussie companies though, like the banks, look very overpriced to me. So there are pockets of the market which are warning signs. They're just very expensive, not a lot of growth. But we think, a good stock picking market. I think if you're actively managing your portfolio, either yourself or with a professional manager, there's lots of outperformance opportunities in the small cap space. So we still think, even though markets are expensive, investors can do well if they adopt the right strategy next year.
Bottoms up.
Bottoms up.
All right, Martin, good to see you. We'll
Good
see you
to see you
soon.
soon.
Martin Crabb there, CIO of Shaw and Partners. Okay, I do think that we're going to our stock of the day, which was Treasury Wine Estates, David Novak, Wealthwise Education, Michael Gable, Fairmont Equities. Let's hear what they had to say.
To me, it just seems a bit too messy, too many sort of variables. It's not like iron ore, China needs it, so they'll just buy it. This is wine. They can obviously turn the taps off if they want to punish us for something. So yeah, not the most reliable sort of trading partner. And obviously, Treasury Wines is more than just exporting to China, but in terms of today's news flow, I think it's a mild positive, but not enough for me to be buying the stock.
Look, the jury's out on this one. Actually, the revenue growth was pretty good for the June annual result, but the earnings per share is still pretty flatline. So that's reflecting in the share price. You can just see tracking sideways there. So look, I've got a neutral bias on this, but keep your eye on for the next reporting season.
All right, really worthwhile checking out that episode of The Call. I know we've had a couple of viewers write in and say thank you for it. We will continue to bring you those technical specials throughout 2025. Let's check out some of the market leaders today. MinRes, as we were just discussing, up by 8.8%, followed by Fortescue, Pilbara, Iluka, and Champion Iron. You can see that China stimulus narrative coming to the fore. On the flip side, though, and it's exactly what we were talking about, ProMedica is down by about 9%. Perpetual on just a raft of bad news coming through from the company, including Regal walking away. HUB24 in the high growth area, off by 6%. HMC Capital, think Digico, it's down by 6%, and Megaport off by 5.65% as well. All right, let's get to the small to mid-cap space of the market. BrainChip, I did mention that it had a contract win. And flipping the page to the laggards, Silver Mines, it was out with a bit of news today. Slips my mind what it was. I saw the news come through, down by 20%. We do have a call in with the company, and Tamboran Resources looking to tap into the NT, off by close to 8% or 12 cents. Let's take a look at what's on overnight in the US NFIB Small Business Optimism Index for the month of November. Also a bit of a read on productivity. Here tomorrow, we do have a speech by RBA Deputy Governor Andrew Hauser. Really interesting to hear Michele Bullock say that she doesn't have a firm view as to whether we'll see the publication of more of the RBA's communiques and also more speeches from these deputy governors. Manufacturing sales in New Zealand coming through. We had the NAB Business Confident Conditions Survey. Conditions the worst they've been since COVID. So yeah, there's a lot of information for investors to take in. We do a lot of analysis here throughout the session. Really hope you can catch up with what you may have missed through the overnight period or through the evening if you've got a bit of time. We've got a lot of really great interviews up online. We've got the Nikkei off by higher by 0.6%. So real positivity around the Asian region. Our market, the outlier, off by 0.4%. But as I said, performed better than going into this interest rate decision. So as the market adjusts its view as to when the likelihood of an interest rate cut comes through, we do have the E-minis in the United States slightly negative at this time. It's been wonderful to spend part of the day with you. From all of the team here, thanks for watching, and we'll see you tomorrow.